What's up guys, my name is Ignas, welcome back to the channel. Today I would like to start a series where we take a proven investor with experience and try to learn exactly how did they got where they are. We don't necessarily need to follow everything blindly, but I have picked up 5 lessons that hopefully will give us new ideas about investing. So today we have Warren Buffett, an American investor and philanthropist. He has a long history on investing, and currently at 92 years old, is still the chairman and CEO of Berkshire Hathaway, a $300 billion conglomerate owning various companies and holdings. Buffett is considered one of the most successful investors in the world, having a net worth of over $97 billion. So I've picked 5 lessons from the Oracle of Omaha that we will take a look into today. An early thumbs up would be greatly appreciated, and with that out of the way, let's start. So in the first lesson, Warren talks about investing in what you know, and his favorite investment, Apple.
Well, you look at everything and relate one to another. I mean, that's the nature of markets. So you're always trying to think about, A, what's in my circle of competence, and then what makes the most sense that's within that circle. But the important thing is to know where the perimeter of the circle is. I mean,
Right.
That's way more important than how big the circle is or a whole bunch of other factors. So I think Apple is within my circle of competence. I think it's an incredible business run by a fellow that's one of the great managers of all time, and he was underrated for a while, but now he's being seen for what he really is. And it's an astounding. You could almost, if we had a card table here, well, yeah, we could put all their products on one table. Can you imagine that?
Yeah.
I mean, and just think of basically the utility of those products to a ecosystem that is demographically terrific and finds that instrument useful in dozens and dozens of times a day. It's almost indispensable.
So Apple, ticker symbol AAPL, is one of the great investments Buffett picked. In the last 5 years, the stock almost 4x'd, going from $40 in 2017 to $152.58 now, up for 281%. The company really grew over the years, and it is now valued at $2.45 trillion US, making it the world's largest company by market cap. They are producing consumer electronics and software, and the brand is also one of the best known worldwide. Now the second lesson is about how much confidence Buffett has in his investments.
I've got 99% of my money in it, so it appeals to me, but and it appeals to a lot of people who feel very comfortable with the fact that we'll never blow it, basically. And I think that they could feel very certain, relative to almost any company, that we won't be at the bottom quartile or something of performance, but they also should feel we're not going to be in the top decile either. We run it. If you're a shareholder of Berkshire, we are running the business like you've got 100% of your money, and you're going to keep it in, and it's up to us to take care of it.
So owning Berkshire Hathaway won't give you the best performance, but Warren is confident that you won't be at the bottom 25% either. So in Berkshire's portfolio, there are currently assets of over $300 billion US, and let us quickly go through the 5 largest positions. So Apple now takes 40.76% of the portfolio. They are holding 894.8 million shares, and they are reporting an average price on it at $136.72. Currently the stock is trading at $152.18, so this position is now up for 11.31%. Now second is a large financials name, Bank of America, ticker symbol BAC. The stock takes 10.48% of the portfolio. They are holding just over 1 billion shares. It is billion with a B, and they are reporting an average price on it at $31.13. Currently the stock is trading at $34.39, so they are up in the position for 10.47%. Third name is a consumer staples, Coca-Cola, ticker symbol KO. It takes up 8.38% of the portfolio. They are holding exactly 400 million shares at an average price of $42.91. The stock is currently trading at $6.14, so it seems they are now down on this name for 4.4%. Fourth name is Energy, Chevron, ticker symbol CVX. That is 7.79% of the portfolio, and they are holding over 161 million shares. Their average price is $144.78, and currently the stock is trading at $160.22, meaning that this position is up for 10.66%. And their fifth largest holding is another financials name, American Express, ticker symbol AXP. It takes exactly 7% of the portfolio, and they are holding 151.6 million shares at an average price of $138.62. Currently, this stock is trading at $157.36, so the position is up for 13.52%. Now, they do have many more names in it, but these five do take over 70% of their whole portfolio.
All alternatives have a future, they are the future over time, but you can't change the world, the base of the world. I mean, you've got 260 million vehicles on the road, or whatever number it is in the United States, and I don't know how many around the world. And they're not changing what they use tomorrow. And the average age of the American vehicle, the auto, I think is 11 to 12 years, something like that. And so the world can't change dramatically. And anybody thinks you can change energy sources 10% in a year, it just doesn't work that way. But the world is going in the right direction in terms of working toward minimization of carbon.
So Buffett is bullish on renewable energy in the long term, but in the shorter time frame, he very much prefers oil. And he has recently been buying into this stock, Occidental Petroleum, ticker symbol OXY. So in the last quarter, they have added 16.26% into this position, and now it takes 3.11% of the portfolio. They are holding 158.5 million shares at an average price of $58.88. Currently, the stock is trading at $65.51, so they are now up for 11.26%.
I don't know whether you're born to some extent that way, but you certainly see that it works, Andy. You just take the people you know, and the ones that are sour on the world gets sour on, basically. And so it's, now it's got to be tough, and certainly if you've got some major illness or something of the sort, that's just, you can have terrible luck in life, and and it can seem very unfair to you, but you're going to have a better experience in life if basically you see the positive sides of things. People will see the positive things in you at that point. And if you can find some, I'd say look for the job that you would take if you didn't need a job. And if you can find that where you're actually, I don't think I've had a job. I would define work as doing something when you'd rather be doing something else. And when I sold shirts at Penny's and I was getting 75 cents an hour, I would rather have been doing something else. But since I've been certainly 24, there wasn't anything else I wanted to do. And I had everything I needed, and life was wonderful. And I tell the students that, you got to live. So you may take a job at first for some organization that you don't admire, or work for somebody you don't admire, but look for somebody you admire. Look for somebody where you're looking forward to working with them that day and doing something that you're looking forward to, that you'd do if you didn't need the money. And Charlie and I found that a long time ago.
So pretty much if you find and do what you love, then you won't have to work another day for the rest of your life. Also, it does help if you are friends with other billionaires in the likes of Bill Gates. Then you have the pass to goof around even at 90 years old. And now we are with the last lesson, where Buffett advises having the right attitude.
You've got to understand accounting. That's got to be like a language to you. And so yeah, you have to know what you're reading. And unless you know that language, and some people have more aptitude for that than others. And that's one thing I learned by myself. Now, I took courses in it afterwards, for example, but I learned it myself in it largely. So you have to do that, and you have to have the attitude that you're buying part of a business and not that you're buying something that wiggles around on a chart or that has resistance zones or 200-day moving averages or that you buy puts or calls on or anything like that. You're buying part of a business. And if you buy intelligently into a business, you're going to make money. And then you have to buy something that, in my view, which you do if you're buying a business, that you're not going to get a quote on for 5 years, that they're going to close the stock exchange tomorrow for 5 years, and that you'll be happy owning it as a business. If you owned Coca-Cola, it didn't really make any difference in 1920. When it went public, the important thing was what it was doing with customers. And you probably would have been better off if there wasn't any market in it for 30 or 40 years, because then you wouldn't have gotten tempted to sell it. And you'd just watch the business and you'd watch it grow and you'd feel happy. So the proper attitude toward investing is much more important than any technical skills.
So Buffett pretty much suggests thinking long-term, zone out of every day-by-day fluctuations, and rather consider if this business will still be successful decades ahead. So these were today's 5 lessons from Warren Buffett. Now don't forget to support the channel and leave a thumbs up under the video. What else have you learned from the Oracle of Omaha? Share your best lessons in a comment below. If you would by any chance be interested in getting access to my notes, then consider memberships. By becoming a member, you will get access to Discord, where I share all my Google Sheets documents and all the buys and sells exactly when I do them. This could be a great option to track my moves closely. Last week I have looked into several companies, so if you are interested in any of these, then click on a video that is currently on the screen. And that was it from my side. Thank you for watching, and I will be seeing y'all in the next one.